it's all about education and educating people correctly in the crypto space. And honestly, to start this out, like, that's why I'm here, is because I know that there's a huge lack of education in the crypto market and just like a lot of misinformation. And obviously we'll hear from you today, your thoughts on that. I want to welcome you to the podcast, and potentially let's start out by having you introduce yourself to the audience and maybe just give your background as to how you got into crypto, if you have a story or just anything you feel like is important for people to know.
Absolutely. And thanks for having me here, Vanessa. I feel like everyone who is in crypto like has to have a story of how they got into crypto. There's no way they just like magically, appeared in front of it. So I was actually introduced to crypto back in college. This was in 2017. So relatively good timing, not at the birth or the inception, but pretty close, especially when it comes to some of these blockchain networks themselves. I was actually in an internship for a family office out in Los Angeles one summer. And one of the interns had introduced a group of like 30 interns to Ethereum. And this is back in 2017, summer of, and kind of went right down the rabbit hole. A lot of people started trying to invest, and that's kind of when the market started. That was like one of the first bull cycles. And I eventually started investing in some of these like initial coin offerings. And I was a broke college kid, I had no money. So very, very high risk tolerance. And it actually was a blessing in disguise, because even though some of these ICOs didn't work out and these assets were very bad investments, it introduced me to the broader blockchain ecosystem. And I started to explore all of these different ERC20, which is like the Ethereum token standard projects, and started to kind of learn what the landscape looked like and where were there possible opportunities. So I went down the rabbit hole. Actually, do you use crypto.com before? Have you heard of crypto.com?
Oh yeah, 100%.
Okay, so crypto.com was originally called Monaco, and the token was MCO. And so their original value proposition was, we're going to create a debit card for people to spend their crypto. This is like literally where it started. And so, little light bulb goes off in my head. There's no way to actually, one of the pain points was there's no way to actually utilize your crypto. Everything was still natively on chain. And so I became kind of like an early stage community member. I was an early investor in this token, which eventually rebranded to CRO, which is now their new layer one blockchain that rolls up to crypto.com. So it's just like kind of an example of literally starting from the beginning, and you just, as long as you're in the community, you're keeping an ear to kind of the door on new investment opportunities. That's how you have to start. You literally have to start by being an on-chain user. And so that's a little bit of my background, how kind of I came to be here today, and eventually quit my job. I was in investment banking prior, and a few people, I was giving like people on the trading floor different picks for different cryptocurrencies. And they were just like, all right, I received advice like, you should just quit your job. You should do this professionally. And a few years ago, I quit my job, started Khelp, and here we are.
I love that. And honestly, I have a lot of questions around that for you. So my first thought would be, how is your life different from just doing like traditional investments to now, opening Khelp and working through Khelp? And maybe you can talk about the differences and the benefits and the cons of that, and like how your life has differed through that, maybe?
Yeah, I mean, my life is very different than most, because after 3 years, like didn't continue on the corporate route. So that very much so. I think though, my experience in investment banking was extremely important, because I got kind of a traditional valuation education almost. It was like a crash course into how to value companies and all the different metrics and like key performance indicators that you would use to analyze a business. I kind of took that framework and ultimately used and applied it to how I actually run a little bit of the investment process for Khelp. Just everything is obviously blockchain based and crypto based. And so there's a lot of nuances, but like the general, I would say, approach is similar. So that was a great experience. In terms of how my life is different, it's very lonely being an entrepreneur. Like I work from home, or I work out of WeWork. You don't have the same office culture. Like you quite literally have to get comfortable working in solitude and being alone. And it's very difficult, because if you and I, Vanessa, had more time to talk, I've got a lot of thoughts in my head, so I'd love to share them with people.
Go ahead.
And you're by yourself all the time. And so that has been definitely an adjustment from being in kind of the corporate big office environment to your conversations are mostly virtual, unless, I am very adamant about meeting investors and prospects in person, kind of doing things traditionally from that perspective. But yeah, you're working from home most of the time, so it's very different.
I relate to you 1,000%. And I also feel as an entrepreneur, there's a lot more stress on you to solve the problem. When you work for a huge corporation or a huge company, you can always look to your left and right and have people help you solve problems. But when you are actually the sole business owner or the founder, number one, you're working 24/7 for your dream. And number two, you are responsible for solving those top issues that are big stress. So I'm very, well, obviously, we're going to talk about Khelp in more detail. I definitely want to. I also wanted to ask you, and I think it would have been good to start on this note too, is the initial coin offerings and your involvement in crypto. Do you have any comments around that? Like, do you have any advice that you would give to people starting out in crypto? Maybe what went wrong, what went right, any stories that you have, something you could share?
Well, first and foremost, and we don't have this today, and I think as a regulatory framework gets implemented, some like through the Clarity Act potentially, which had passed the House and is pending approval in the Senate, an initial coin offering is such a blind investment because a lot of times what I call or refer to as the tokenomics, the structure of the token, what the initial allocations look like between the team, early investors, what the pricing looks like. A lot of that information isn't disclosed and ICOs actually, like, they're not viable anymore in the US. And I'm sure they'll bring them back. They were pretty much outlawed, but like, it's a tough process. And just with a lot of early stage coins and tokens, and it's something for anyone who's on like listening right now to be wary of. You're promised, you see these incredibly powerful marketing campaigns on Twitter or on social media about why this coin or token is going to return 100x and you got to get in fast. But then on the other side of it, it's very difficult to actually do your diligence. It's not like a traditional company where you can just go search on Edgar and look up the filing prospectus and learn all about the company down to every detail. We don't have that in crypto. So I think once there's a formalized regulatory framework where there are certain processes and procedures that a new coin or token, if they'd like to list and they want to do a formalized offering, they have documentation that says, okay, well, this is what the allocation structure looks like between whether it's our venture investors or the original team, what funds or how funds are going to be used that we're raising, and what our kind of milestones look like. A lot of that is, it's blind for that original investor. And most people that are making these investments, unfortunately, are inexperienced, and they're seeing appealing marketing materials online of why this is going to be the next best thing, and it's not truthful. So it's very difficult. And unfortunately, I wish there was like a great answer, but it really is to be wary. And I guess the one thing I would say for those out there that are trying to invest in early stage coins or tokens, it doesn't hurt to be the third or fourth person, metaphorically, to invest. Let that project come out, follow it diligently. And if it starts to achieve milestones that it had set out at inception, or you start to see that the project is building momentum, then maybe is a better opportunity to start to deploy capital rather than literally starting from scratch. Because I've just seen so many investors burned like that.
Yeah, no, that's great insight and like great advice. And that's honestly what we're looking to hear on the show, because I have so many thoughts around this. So number one is that it is easy to get lost on X, for example, with all the meme coins and initial coin offerings. And like, honestly, it's like, it is a way, what did they say? Like a way of passage. Like, you have to go through these kinds of mistakes to really, truly learn in the crypto space. But it's true. It is easy to dive into native tokens and meme coins and all these things. And there is such a get rich quick mentality that a lot of people are lost in the space. What I love that you said is that it's okay to be the third or fourth person to invest. So it's 100% okay to do your research into companies that you are investing in, because I make a great example on the podcast all the time about Celsius and the whole Celsius scandal and how so many people were investing into the native token and sell and were like, they weren't paying attention to the business model in the business operations and how they were actually fundamentally making money. So another guest speaker came on that gave great insight too about like meeting people in person. If the coin that you want to invest in has a company that's going to a conference, like meet them at the conference, like go to in-person things in the crypto space, meet, investors and or financial advisors or people that actually are experienced in the space that can help you before you go to influencers and like social media personas. Like, definitely trust the people that have been here for a while, and know that if you invest into Bitcoin now, you can still achieve wealth and prosperity through that. But this get rich quick mentality, like, do you have any comments? Like, it's such a problem in the space.
It is such a problem, and so many investors also got burned in like Terra Luna, and like one of our original portfolio strategies had an allocation, and unfortunately was hit by it. So same with some of the largest venture capital firms and hedge funds in the world. What I would say, especially when it comes around yield, is like we used to use this term that like not all yield is created equal. And so you see a lot of times like an APY where it says, oh, we're going to pay you 20 or 30% on your stable coins. And so that's why Terra Luna was so appealing. That's why Celsius was so appealing. There were these artificial yields that were being offered that were so enticing. And so what I would say to any investor out there, do your research in trying to create kind of like a comparable analysis framework. And what I mean by that is, okay, if a protocol is offering 30% yield, do some digging on how that yield is being created, first and foremost. Secondly, can you find comparable yield out there in the market? So by way of example, actually, one of my clients the other day sent me a message about 30% stablecoin yields paid out monthly. And if you were to go to Aave, which is the leading lending marketplace on Ethereum today, and look at the stablecoin yield on USDC, I think it's probably anywhere in the ballpark of 4 to 5%. If you were to supply USDC, you're going to get about 5% annualized. Well, right then and there, okay, well, if the leading loan market, which has the safest smart contracts out of any of the DeFi protocols that have kind of been battle tested over the years, if that's only offering you 5% and another protocol's trying to solicit you for 30 or 40 or 50, there's probably a reason. And secondly, how is that yield being paid? Is it being paid in the native currency that you're investing in? Are they using some sort of like subsidized incentives with a governance token to artificially inflate that yield? So that's just one example where if you see something that feels too good to be true, it's because it probably is, and go do your research and start to learn the landscape. For anyone out there who's kind of new to DeFi, like go look at DeFi Llama. It aggregates all these different protocols, all the different chains, and you can start to do some research on your end. And so that would be my one like heavy piece of advice.
Yeah, no, that's really, really great, like good advice to give people that are getting lost in the crypto space. And what I try to do on Cryptic Humility, and the whole point of the show, is to actually bring credible people to you. So if you are lost in the space, you're looking for guidance, you're looking for resources, you want to invest and you're not really sure. By the way, we're going to talk about Schwab Network and how you were just on there for Ethereum ETFs, right? I definitely want to cover that for sure on the podcast. But just, meet with credible people, talk to people in real life, do your due diligence, go into Etherscan, start looking into this stuff, be hands-on, go on chain, and and also, like, we always talk, like, read the white papers. If you're interested in a cryptocurrency or a blockchain, read the white papers. I was just joking with somebody else that was on the podcast about how, like, Bitcoin's white paper is like 7 to 9 pages. It is like totally doable to find this information, but a lot of people steer away from it because of all the get rich quick schemes and the retail investors and sellers that are out there on X. So I think what you said was a really good point. I want to talk about we don't have to go ahead. Yeah, we don't have to talk much about.
I was going to say the Bitcoin white paper. The only thing is that is difficult, especially if you're getting into the space. The vernacular is difficult to comprehend. So even if you are learning you're reading it for the first time, a lot of it doesn't make sense. Because it quite literally is brand new language. My friends make fun of me all the time that I have all these like synonyms for different words and like slang, and they're like, what are you saying between layer ones and layer twos and DeFi? And so it is kind of funny from that perspective. The other thing I would say too is if you genuinely are starting from scratch, do not be afraid to reach out and find like a professional like investment manager like myself. There are some other people out there as well. They will help guide you, point you in the right direction. Literally one of my first clients that I onboarded a few years ago, it was a little bit disturbing, but the gentleman had gotten scammed. He had been promised some Bitcoin mining yield project. And I had to literally, to your point around Etherscan, I had to go and like look up the block transactions that they were like allegedly saying were his Bitcoin transactions. And I was searching the wallets using blockchain explorers, and like the wallets didn't exist. They were fake transactions. And so by way of example, and in hindsight, that actually grew into a great relationship because he's now been a client of mine for a few years. And in a sense that did build the trust of like, hey, me showing him exactly how he had been defrauded. But long story short, like, do not be afraid to reach out to people, leverage your professional network, try and get an introduction to a manager. They'll give you 30 minutes of their time, even if you don't, end up being a client or anything like that. I would say that as well.
You know what? I was going to say too, that's probably really, in a way, great for your job, because if people have been scammed or there's fraud or there's mistrust, like, and they're coming to you, it's like, this is a chance for you to prove yourself to them and also in your own career, and show them that like you are needed in this space, in this industry. So you've probably, I mean, I'm sure you probably have other stories too of like people that you've legit helped and saved and like guided correctly on the crypto, in the crypto space. I know Fidelity does crypto ETFs. Honestly, I would love to hear your thoughts on crypto ETFs. I know, like I said, Fidelity's doing them, and I know you were just on Schwab Network to talk about Ethereum ETFs, if I'm not mistaken. What are your thoughts on those? If somebody were to invest in crypto, is that the best avenue?
If you are brand new to crypto and you are not trying to explore the landscape further than Bitcoin or Ethereum, absolutely use the ETFs like BlackRock, Fidelity, like with IBIT now, I mean, the largest Bitcoin ETF, one of the most successful ETFs in the world ever, which is so awesome. Absolutely use the ETF. It's the safest way to go. There are some nuances. I don't want to say any downside. If you do own the native assets, there are kind of tax advantages of owning assets natively, being able to leverage the wash sale. So for those who are unfamiliar, and this is like a really cool little kind of tool when it comes to investing, if you have a drawdown on Bitcoin, so say you buy Bitcoin, it's $100,000, it draws down to 85,000. If you actually own the native asset itself and not the ETF, because the ETF is security where Bitcoin is not, you can sell Bitcoin, like your entire position, create a $15,000 basically capital loss, and then rebuy back that exact same asset, which is the wash sale rule, which Bitcoin basically, or all crypto assets do not face. And then buy that asset back, say that asset then appreciates to 115,000. Now all of a sudden you have an unrealized gain. You can actually offset that liability. So that is the one advantage of owning it natively. And you can use there's to do it as well in a safe and secure manner. Like there are qualified custodians out there. So Robinhood's one of them, Coinbase is another. My clients use Anchorage Digital and Gemini. Go use a qualified custodian if you want exposure outside of just Bitcoin, Ethereum, because that is another limitation, is that the asset landscape is limited. You only have basically Bitcoin and Ethereum ETF so far. And I think Solana is probably next. But yeah, for intro investors, there's a reason these have been so successful, because they can easily just, roll them right into their Schwab account or their Fidelity account.
Right. And it offers, in a way, non-direct involvement, because obviously, like, if you're owning these assets, like, there is a great risk too with volatility and stuff like that. So I agree. And actually, I went to a barbecue this past weekend. This is totally off topic, but I went to a barbecue this past weekend, and one of my friends' moms was trying to ask me and talk to me about crypto. And she was like, I want to invest in crypto. Like, how should I invest? I actually recommended to her, because she already works with Fidelity, to talk to them about the crypto ETFs that they offer, because it is just like a nicer way for people that don't have as much education in the crypto space to get involved safely. Like, if you could go in two avenues, whether you do a crypto ETF or, in the worst case scenario, you start talking to people online and talking about native tokens and stuff. My greatest advice, and Boomer obviously agrees with me, would be to talk to somebody professionally and maybe get involved in this direction compared to trying to make it on your own. Because obviously we have great insights, and it would save you a lot of time, money, and also would probably educate you faster in the space if you went with somebody that is trusted. And on that note, I definitely want to talk about Khelp. Maybe you can introduce, I know you probably talked about it briefly, but again, when the company started, what you guys do, and just we'll start there. And then if I have some questions, I'll ask it.
Yeah, so Khelp is quite literally a crypto investment manager. It is structured as a traditional registered investment advisor. We essentially actively manage crypto portfolios for individuals and high net worth households at a high level. So I run a few different actively managed strategies. We run a momentum trend Bitcoin strategy using like a quantitative model. We also run like a fundamental layer one model investment strategy. So think all the different layer one blockchains. I've built this massive fundamental framework, kind of alluding to back how I started in TradFi and using a valuation framework to really drive an investment strategy. And then lastly, I run like a diversified strategy, which is a mixture of layer one, layer twos, the coins and tokens, and then kind of almost like early stage liquid venture portfolio, which has exposure to DeFi and to infrastructure and culture is another subcategory. So long story short, manage a few different strategies. Like my clients are able to choose or blend strategies together, no different than they would have like a traditionally managed equity portfolio. They can also customize a portfolio. I have a few clients who like just want alt tokens, so like a little bit further down the risk curve. And so yeah, so we basically, and I guess a little backstory on Khelp, we went live in early 2022, and actually had originally raised some pre-seed capital. And I would say business has been very indicative or similar to like the crypto markets and how volatile they are in terms of ebbs and flows. When we first started, it was like pedal to the metal, like how fast could we grow? So we had raised some pre-seed capital. We were a team of 5. I actually had a few traders from my old bank. And then unfortunately, like Terra Luna collapsed that summer, which was detrimental to the space. Then Celsius, eventually another domino, FTX collapses, then Genesis. It was, for a lack of a better term, it was an absolute shit show. In getting started. And so like it was literally just like a figure out a way to survive. I knew that the technology was brilliant and eventually this was going to come back, but it was a matter of when and like how do we figure out a way to bridge from one period to the next. So I'm very thankful now. Got over 50 clients, a few million in crypto under management, starting very much to see that like hockey stick growth. But it was a rocky start, and I'm kind of like here to tell the tale. Thankfully, like a preserved client assets through all of these different company downfalls. And that was one of the toughest things, I think, Vanessa, to articulate to people is when these companies were failing. It wasn't the blockchain itself. It wasn't Bitcoin. It wasn't Ethereum. It wasn't Solana that was failing. It was these centralized companies that were built to offer crypto products that were adjacent to the industry. And those are the companies that failed, not the actual tech itself. And so it was very tough to articulate that, especially because I think crypto gets a very bad narrative in the news and the media. I think, click sell at the end of the day, and people are much more infatuated with, some sort of scam artist or bad news than they are learning about the tech and actually learning about the value proposition and investment thesis of different, pieces of the landscape. So that's, Khelp in a nutshell.
And so many thoughts around that. First is, so you said who would you service? Like you service people that have a higher like net income or higher like
the priority, honestly. Like our minimums are $10,000. So we don't really work with like very, very retail. We're not going to take on like an account. Like I would suggest, if you're going to go invest $100 in crypto, use an ETF, open a Coinbase account. And actually we did not preface this, but nothing I say on, today's call is investment advice. Yes. Forgot to preface that up front. Little disclaimer, but yeah. So if someone's like really looking to add, I would say, like an actionable allocation to their broader investment portfolio, that is where Khelp comes in to play a role, because the traditional investment advisor, unfortunately, has dismissed the asset class for so long and can't really advise on the space. And so there was really an opportunity to play a role in people's broader portfolios as kind of that carve out niche.
No, that's perfect. I like people to know that, just in case anybody is listening that would be interested in investing eventually, and maybe they need guidance in that. So because we had a fund manager on not too long ago, and he works with like top scale clients, like people that are like completely rich. So it's like, so for the average user and people that are, talking to us today and listening, it obviously they wouldn't be working directly with him. But if they have like 50 grand or they have like something that they want to invest in, like definitely you would be the perfect candidate for them. So I like to make that known, just for the audience to hear. But also what I wanted to say is that with this current administration as well, I love that you said that it's not crypto and blockchain that was failing and the technology that was failing. It was all the centralized companies. It was all the fraudulent people in the crypto space that were actually giving it the bad name, the bad reputation, and the bad image. So when we're talking about this current administration and now like Trump, and they're all trying to help the crypto space, like the crypto reserve, Trump launched a meme coin, we know World Liberty Financial, and stable coin, the Genius Act just got launched. So in your time of struggle too, in that time, it was also really hard because there was minimal regulation around crypto. There was minimal regulation. The Biden administration in 2022 wasn't in high favor of crypto. There were a bunch of lawsuits, especially against like XRP, for example, and Ripple. So I can't even imagine the time that you must have had like starting your project in like
Was
an
hell.
yeah, pretty much. Like that's the best way to describe it. So, but we're seeing more regulation with crypto now. We're seeing more regulation with stable coins. We're seeing more regulation and just favor with crypto now. And actually, I talked about this last time, but in Trump's crypto reserve, all the reserves that the government is getting is from all this criminal activity that has occurred. So they're collecting from criminal activity. What I think is really cool about that is that they are trying to fix the crypto image and the crypto industry by everybody who's done wrong now using those resources to try to do right and try to make us the crypto capital of the world. So what do you think about all the regulations and stuff that's been going on in crypto? I mean, obviously, hopefully would be in favor of it because it helps us. So, but what are your thoughts?
I mean, it couldn't be more positive in terms of the developments that have happened. I would say some of the stuff that's come, and I'm almost indebted to the Trump administration for their sentiment and positioning with crypto. Some of the projects that have been launched, like even the Trump meme token and World Liberty Financial, I do consider it noise. I don't actually think maybe that was the best decision to get involved personally. But in terms of like the actual regulation, I don't know if you saw last week, the SEC came out with like Paul Atkins with Project Crypto, which was a public speech that basically said that the SEC was going to figure out a way to bring traditional capital markets on chain. I mean, that is monumental. Of course, it wasn't really picked up by the news very much, but that's a huge deal if we can bring like our public equity markets onto Ethereum or Solana, and then actually now you have real world assets that are trading, and we're bringing extensive liquidity and instant settlement to all of these different investment vehicles or assets. So that's one part of it. The other two, like with stablecoin regulation, like the Genius Act finally passed and became law a couple of weeks ago. Absolutely huge deal. Basically, they outlined, okay, what are the guidelines that issuers need to follow to be a compliant stablecoin issuer, and what are the requirements from a collateral perspective? Like, what can you actually use as value to support and peg that stablecoin one for one with the US dollar, and why this is so important. And the next act kind of is the Clarity Act, which is on deck, like I mentioned earlier, which will be a formalized crypto regulatory framework for assets outside of the stablecoin landscape, really like layer one blockchains. And another piece of information just this week, actually, the SEC coming out and saying liquid staking and staking in general is not considered security transactions. So really just providing that clarity for the market, I think, is so monumentally important, because so many companies, unfortunately, went overseas. And back to your point on like becoming the crypto capital of the world, the United States is the country for innovation. And I really do believe that we're going to continue to lead that charge. But all of these crypto companies had to go offshore because there was no framework, there was no clarity, there were no guardrails for them to follow. And so I am the biggest proponent of regulation. I think anybody who is not, honestly, does not
is a scammer. It's a scammer.
Yeah, exactly. It's like, for a lack of a better term, they're a scammer. I think what this is going to do is it's going to open up. So at least in my world a little bit, because I'm now starting to sub-advise traditional investment advisors and kind of be their partnered crypto manager essentially for their clients.
Nice.
And so many of these compliance departments, actually, they won't allow it. They prohibit it to work with a crypto manager, even someone, you're trying to bring real value to their clients, but because there's no law and there's no framework for them to follow. And so it's better for them, kind of what I said earlier, like, instead of being the first player to be the third or the fourth, everyone's like kind of waiting for someone to get out in front. So you see like JP Morgan the other day, partner with Coinbase and start to bring crypto solutions to their clients. BlackRock, obviously, Larry Fink has become literally a figurehead for the space, which is so important. And so I think it's I think the institutionals, it's already on our doorstep, but it's coming where it's going to become a part of our broader financial system. And I really do believe, especially around stable coins, that like you are going to be using, your computer interface, your phone, and you're not going to know, but everything on the back end is being settled using a blockchain, specifically a public blockchain. No different than you drive your cars on the freeway. Well, we're going to be doing things digitally on public freeways, which are basically blockchains for the internet. And it's coming. And so that's where I think the user interface, the user experience is still in its early stages, where we've got to get to a point where you're using your computer or phone and you don't even realize, but on the back end, it's all being settled on chain. And I think that's what we're going to get to.
No, for sure, for sure. And I had a guest speaker on who was trying to create a blockchain that includes bank involvement a little bit. So like the banks would be confirming transactions and helping the blockchain move forward. Obviously, in ways that might diminish the complete decentralization of the blockchain. But I know that I talk about this all the time on the podcast too, that it's good that banks are slightly getting involved now in investment, firms and stuff, because there was a time, and I'm sure you probably even faced this as well, but there was a time where you're starting a crypto business and like none of the banks, like Chase Bank, TD Bank, nobody is going to support your crypto business.
A few months ago, I actually so it's called Choke Point 2.0, where like the banks basically prohibited any sort of crypto company from having a bank account or being able to obtain banking services. Really what blockchain was like built for, especially in third world countries. I actually lost access to my first Citizens Bank account. I was out. This is a true story. This is like why my job is difficult, but it's all worth it. I was out having dinner with a prospect and an old family friend, and I went to pay for dinner and my credit card got declined. And I was like, why did my credit card get declined? I'm very, very diligent every month. I make my payments. And so I call up my branch manager the next day and I was like, and this is verbatim in quotes, I was like, my credit card got declined. I just wanted to check in on this. And she goes, I'm so sorry to report, but your accounts, both your credit card and bank, have been closed for being associated with Bitcoin. That was in quotes. Your company is associated with Bitcoin. Now, keep in mind, I run a traditional investment advisor practice. Like my business, like how it gets paid out, everything's in dollars. It is very much a traditional business. I'm fully regulated under the FINRA guardrails. Kid you not. So just an example of what we've been through, like for trying to do everything the right way too. And still, we've been pushed out to a degree. So all that's going to be changing. I think all these banks are going to be figuring it out here in the near term. And you're going to see just that pendulum swing very fast. And I think it's already happening.
I agree. I think it already is happening with this current administration in the next 4 years and all the progress that we're going to make in the next 4 years for crypto. I feel like this is finally our breakthrough. It's crazy because when you think about it, crypto started in 2008, like originally in 2008. It's taken us so long for this consideration and this regulation. So, and people, like I say this all the time on the podcast too, people always say, oh, it's too late for me to get involved in crypto. It's too late for me to get involved in Bitcoin. We are literally at the beginning of overturning an entire traditional financial system and method. It's like, this is the beginning. This is the perfect time to get involved. And we're on a long road forward. We're like pioneers in this industry. So like you're hopping in at the perfect time. You could hop in a year or so and it would still be a good time, So I tried to, go ahead.
I was at an event literally only because I was at an event last night. And Anthony Scaramucci was speaking. It was a Bitcoin event. And someone asked that exact question, goes, Bitcoin's already, over six figures. It feels like it's too late. And Anthony was basically like, I can't articulate how early it still is. Think about the internet was invented in the 1970s, technically speaking. And it took until the dot-com bubble in the early 2000s for it to explode. He also made a great analogy about Amazon, that Amazon had, multiple 50% drawdowns. It was a 90% drawdown at one point in time. We are so early. It takes time to transition major infrastructure changes. Changing the backbone to financial systems takes a lot of time. And then he also made a great point. Sorry, this is just so fresh in mind because it was last night at a Bitcoin event. He was basically like, at one point in time, there were towns that didn't want automated vehicles driving around. They still thought horse and buggies was the best approach. And they didn't want to push that business out. So it's very similar to how there are regulators today that are still anti-crypto because it's scary. It's new technology, it's new innovation. And unless you have done your research, it's very easy to dismiss it rather than spend hundreds of hours to learn about it and then have that light bulb revelation say, now I understand what this value proposition is. Now I understand why some very, very bright people out there are so obsessed with this tech. And of course, because it's a great investment opportunity as well, not investment advice, but so sorry, that's my long-winded spiel on that.
No, actually, so I worked at the bank right out of college, and it was interesting. Because for example, the bank had so many new innovations, like check deposits, how you can take a picture of your check now and deposit it into your online banking. Do you know how many people would come into the bank, especially the older crowd, and just like not want to get involved in the technology? I think partly as our society, we get so comfortable in our habits, in our own conditioning already. So like when new technology presents itself, maybe the younger generation, like our generation, would be more interested in it, but it's 10 times harder to get that older generation to evolve with technology. Even so, I work a full-time job right now outside of this, and there are even people that still call me for mailed invoices, and I'm just like, you're actually working harder getting mailed invoices. You're working harder coming to the bank to deposit a check. And the same thing with blockchain, we're working 10 times harder, having the bank manage our money, or, and besides becoming our own bank in time and being independent. So I try to tell people that this, even when we're talking about fintech, because this podcast is about fintech too, and like Apple Pay, there's some of my friends that still are not involved in Apple Pay, and I'm like, guys, if you were like, this is off crypto. It is like, it's off, this is off crypto, but like, if you're in an emergency and you only have your phone, you don't have your wallet, like you can use Apple Pay. Your cards are on Apple Pay. So it's like, I try to teach people that our society is always moving towards technology, but the technology is always bettering our future. So crypto, blockchain, fintech, all these innovations are here to better our future. So it's really
it will win too. Like better technology ultimately wins. It takes time, but if there's a real use case and it improves the environment and the execution success, and that is blockchain in a nutshell. I try and outline that too. I think another difficult thing though for people to comprehend is that there are different aspects of crypto where like you hear about Bitcoin, you hear about Ethereum and Solana, and like they are two very different value propositions. I mean, really Bitcoin, in my opinion, is used as a hedge against like purchasing power debasement. How quite literally after we moved away from the gold standard in 71, we continue to print an endless amount of dollars that's ultimately led to runaway inflation. If you actually look at that inflation curve and then like what the purchasing power of what has happened to your dollar, I mean, it's actually really scary for anyone who hasn't looked that up, like you can use Fred, you can look up the purchasing power of the dollar. And so then comes along a technology that's not controlled by any government or centralized sovereign nation, and it's got a fixed supply. It quite literally is the opposite of the dollar. So like it's funny because like that's what I use as a savings account essentially, and my family members think I'm crazy. And then I zoom out a little bit, and yes, in the short term there's a lot of volatility, but if you use it as a long-term saving vehicle, it objectively has been the best performing asset class in comparison to any other thing used as a saving vehicle. So it's like the data speaks for itself. And then on the other side of it, it's like, okay, well, Ethereum, the Solanas of the world, okay, now there's an environment where we can execute and settle transactions in real time in comparison to the systems we use today, which are like T+1. Like if you go to trade stocks, it takes a day for that transaction to actually settle. There's a government agency where basically like the New York Stock Exchange has to send the transaction over to the agency. The agency has to approve it, update the ledger, and basically provide settlement. Well, you have these blockchain systems now that literally do it in a fraction of a second. That is objectively better tech. And so how do we figure out a way to implement this under a safe, compliant, and I'd say regulated environment? And like it's going to win, and it's already happening. So
do you want to share anything else about Khelp, or even just any like last advice that you want to give anybody, or anything else you think would be important? Maybe like if somebody wants to be in your career and follow your career path, what are some key terms that you think they need to know? What is some research you think, like some topics you could shoot off that they should like start diving into?
Okay, no, absolutely. So if you wanted to become like a professional crypto investment manager, which like buckle up, it's going to take several years to get into the right position. I would say the first piece of advice I have is, especially if you're a crypto trader, not necessarily move away from what you do, but get on chain. Literally go get a MetaMask wallet, get onto Ethereum, get a Phantom or Soulflare wallet, get onto Solana. And start interacting with these DeFi protocols or different gaming applications, transacting, making like payments, interacting with different video games, whatever it might be. I think that gives you a look under the hood as to which blockchains offer the best user interface and like execution environment. And what a lot of people miss with blockchain, especially, and I hate to throw it under the bus, but like XRP is a very misunderstood asset, at least fundamentally. At the end of the day, these currencies that underpin these blockchains are commodities in the sense that like there's a supply and demand economic model for them. And the networks that have the best user interfaces that attract the most users, no different than a SaaS platform has potentially subscribers, it's going to require users to transact, to pay for those transactions in the native currency that underpins that blockchain. And so typically where you feel most comfortable or the apps that you are using the most on chain, typically there's an investment thesis there. It almost kind of goes back to, I think it was Peter Lynch, who was like, buy the stocks of the companies that you use or that you're a consumer of, because there's probably a reason that company is attracting you and maybe is able to charge a premium for their service. That's kind of one piece of advice I would give, or even just like an initial blockchain user or investor. Secondly, is just like learn how to build a structured investment process. And this could even be for someone who's doing this at the personal level, because what it does is it removes emotion, because often you do get tied to certain projects. And if you create an actual framework where, okay, you're only allocating a certain amount to certain parts of the industry or based on your risk tolerance, and there are videos out there for like how to calculate volatility and standard deviation. Learn how to build a structured investment process, because it will ultimately remove your bias and emotion. And so that is another general piece of advice I would kind of give to anyone out there that's trying to do this on their own. And then if you really start going down the rabbit hole, yes, there are like blockchain fundamentals, try and use these blockchain explorers to figure out how many daily active users are on a specific network, how many transactions those blockchains are processing per day, how much they generate in fees or revenue or their decentralized exchange volume, total transaction count. There are all these different metrics that you can use to quantify, to kind of come up with a narrative or a theme for a specific blockchain that ultimately is going to drive your investment decision. A lot of information there. Maybe like go back and replay that and go through it again.
No.
For anyone out there, but that'd be like my 3 pieces of advice.
Yes, no, that was amazing. And to reassure you, all the information you gave was great. And I wanted you to do that because on the podcast, they've probably already seen it at this point if they're listening to us now. But I'm going to put up a bunch of definitions and a bunch of like topics for them to look into based off what you just listed. So they'll have a visual to kind of go off of. So, but that was wonderful. I want to say thank you so much for all the insight and everything that you've given on this podcast today. I'm just so grateful to meet people in the industry like you and just credible people that can teach you correctly. And I think following education and like something like, even if it's not my podcast, but something like a podcast, or if you're following somebody trustworthy on X that gives out news, like to stay in the loop and to not be misled, it is incredibly important to follow credible, trustworthy people in this industry, as we are pioneers, basically sailing through an unknown sea, and kind of the rules are gonna be made as we play. So I want to say, Boomer, thank you again for being on the podcast. Any resources that you have, like your LinkedIn or however you're comfortable with people reaching out to you, I will have them listed so we can talk after this, and we'll get all that information, any resources you have. But is there anything you want to say before we go?
No, I mean, I appreciate you having me on. I think like any opportunity to shed some light in a positive manner on the crypto and blockchain space is always a great opportunity. And you're spot on. Like we are quite literally like navigating uncharted waters in real time. And it's a very small island of the crypto community. I'd say that I don't want to hype us up too much, like the sophisticated crypto community, not what you hear about in the degenerate, scammers online. And I think it was I think it was Charlie Lee, it might have been Tom Lee. But anyways, I think it was Tom Lee, had like a great quote. And this is for anyone who's new to crypto, is that at one point in time, pirates loved gold, didn't make gold a bad asset. And it's very similar with crypto. We've had bad actors. Unfortunately, they've been all over the news. But the technology is brilliant. And it's going to replace a lot of the infrastructure that we use today. And remember that the cryptocurrencies underpin the blockchains that all that infrastructure is going to be built on. And so the concept of a private blockchain, it might be applicable for certain use cases, but really building permissionless, democratized networks where anyone all over the world, all they need is Wi-Fi and a computer to access is really the end goal here. And so just keep that in mind as you're going like through your learning process. And yeah, just Khelp's on Instagram. I'm on LinkedIn. Feel free to reach out. There's these contact options there. So if you ever want to inquire, talk more, or just have any like crypto questions, like my door is always open. So
perfect. I'm sure people will. I appreciate you for coming on, and all resources will be listed. Thank you guys so much for watching, and we will check you out next Monday on Cryptic Humility. Thank you.